The New York real estate market is experiencing a major shift. Many people dream of moving to the Big Apple to enjoy the vibrant lifestyle of the city. New York is rich in culture and provides business and job opportunities. However, like other cities, the Big Apple has been hit by the pandemic and rising inflation. This results in real estate investors doubting whether buying a property in New York is a good decision. Here's all the information you need to understand the New York housing market. In the ever-evolving realm of real estate, data-driven insights are the bedrock of informed decision-making. The New York State Association of Realtors has once again shown its monthly housing market report, offering a snapshot of the current state of the New York housing market. Furthermore, there were various other reports released in August 2023 by the NYSAR. On pending sales, in August 2023, the pending sales of the Big Apple saw a decline of 11.4%, amounting to 10,826. This means these pending sales are a forward-looking indicator as they provide insights into potential future home sales based on contract signing. In addition, closed sales also experienced a substantial decline, going down by 18.8% to reach 11,310. Moving on, there have been reports from the NYSAR that the number of homes available for sale witnessed a substantial drop, plummeting by 26.9% to a total of 27,686 units. This decline in available homes further sparks the competitive nature of the housing market in New York City. Adding on the median and average selling prices, the report says that the median sale price in August 2023 surged by 4.8%, reaching $411,500. On the other hand, the average sales price also experienced an uptick, rising by 2.6% to $536,024. This means that these price increments indicate a persistent demand for houses, which will exert upward pressure on prices. Recently in the selling trend, sellers in New York State received on average 102.9% of their original list prices at the sale. This figure represents a year-over-year gain of 0.2%, showcasing the competitive nature of the market. In addition, days on the market, a key indicator of market efficiency, increased by 10.3% to 43 days in August of 2023. However, the month's supply of inventory saw a decrease of 9.1%, reaching 3 months. This indicates a faster pace of sales, emphasizing the demand for the available supply. The analysis of the New York housing market for August 2023 gives crucial insights into the ongoing trends. It shows the competitive nature of the market, with prices on the rise and available inventory. This urges buyers and sellers to carefully navigate this dynamic real estate landscape. As we dig into the real estate market in New York for August 2023, a critical question emerges. Is it a seller's market? To answer, let's look at the latest housing statistics and trends to see the dynamics at play in the city that never sleeps. We start with stats about housing prices in New York. In August 2023, the median home price in New York remained steady at $795,000 year over year. The median listing home price per square foot stood at $774, while the median home sold for $715,000. We progress to the sale-to-list price ratio. The sale-to-price ratio, which is a key indicator of market competitiveness, was 97.3% in August of 2023. On average, we find that the homes in New York were sold for 2.7% below their asking price during this period. Buyer's market dynamics. Despite the high prices in the housing market in New York, it was categorized as a buyer's market in August 2023. This designation outweighed the demand, thus providing buyers with a variety of options and potentially room for negotiation. As we take a look at days on the market, we find that the median for homes in New York was 86 days. But what does that really indicate? It shows that, on average, homes are sold after spending 86 days on the market. Furthermore, the trend for median days on the market has been on a slight incline for the last few months, not to forget a minor increase compared to the same period last year. New York City, which comprises 235 neighborhoods, has a unique real estate dynamic. For example, the neighborhood of Tribeca stood out as the most expensive, boasting a median listing home price of $5 million. Meanwhile, Riverdale emerges as the most affordable neighborhood with a median listing home price of $349,000. $49,000. From these statistics, it's evident that the New York City real estate market is currently favoring buyers, but the high sale-to-list price ratio indicates sellers still have strong bargaining power. We spin the time back to July of 2023, when the New York City housing market experienced a seasonal slowdown as more New Yorkers continued their summer travel. However, the StreetEasy data indicates a rising trend in the number of listings entering contracts compared to the previous year. The key takeaways are that despite the summer slowdown, luxury sellers maintained the upper hand. Asking prices will rise and sellers will stay in the driver's seat this year. New York City has a track record of being one of the best long-term real estate investments in the U.S. This is because the real estate market has been booming year over year. Furthermore, home prices in New York have nearly doubled over the last few years, and this is because supply and demand continue to favor sellers. According to the StreetEasy forecast, due to the rising cost of renting and inflation, rent demand will continue to cool down in 2023. Despite record high rates and a possible annual savings of $14,500 from roommates, New York renters are prepared to pay more to avoid having those roommates, according to their research. All of this suggests that the rental market may cool off more slowly despite reduced affordability. New York owners will and should be prepared for a possible recession. Talking about a recession, is the New York City housing market about to crash? Well, many have predicted that the USA would face a mild recession soon. As a result of this, it can lead home buyers to becoming hesitant to invest in New York City housing market. However, some experts say that the market will only experience a slowdown, which isn't likely to happen. The fact includes the inventory being low. Although there are many houses for sale, the supply must be high to cause the market crash. And as of now, New York City has enough housing units for around 4 months. Another reason the crash is unlikely to happen is that buyer sentiment is high. Despite economic uncertainty, we've witnessed sales falling off, but many people are still purchasing houses in the city. We can add that the demand for housing units in New York is high. This means that the inventory will remain low throughout. Home builders aren't building enough properties. Since getting permission to buy land and build houses is challenging, the supply of newly constructed homes is still low. Furthermore, even if construction companies start building houses now, the number of units won't be enough to meet the demand. Foreclosures have fallen across the country. This means people feel more confident about their finances and have more equity in their properties, which leads to foreclosures dropping. Currently, a foreclosure crisis is not on the horizon, and lenders are stricter. Since homeowners have to meet requirements, getting a loan is more difficult. Therefore, there's no fictitious purchasing power changing house demand and prices, so a housing market crash is unlikely to happen. With this, is it a good time to buy a house in New York City? Well, if we consider the 1.7% projected increase in the market over the next year and the competitive nature of the current market with a high percentage of sales, it might be a good time to carefully consider buying a house in New York City. However, potential buyers should sit and analyze circumstances and market trends. Contacting a real estate professional for professional advice would also be key in this situation. And if it's a good time to buy a house, where are the preferred places in New York City? The Big Apple is dominated by renter-occupied 1 or 2 bedroom apartments. Approximately 76.75% of New York dwellings are rentals. The New York housing market has affordable townhomes. In addition, single-family homes account for just 1.15% of the city's housing units. For the past 12 months, New York real estate has cooled off. However, the cumulative appreciation rate over the past 10 years stands at 38.81%. Hiring a local property management company can help you find tenants for your investment property in New York City. So if you're thinking of investing, here are the 5 neighborhoods in New York City that have had the highest real estate appreciation rate since 2000. The neighborhoods are Marble Hill, Inwood North, Roosevelt Island, Tribeca South, and Washington Heights Southeast. It's safe to say there won't be a crash coming anytime soon. However, if the Big Apple is ideal for your real estate investment, carefully analyze the trends or call a real estate agent for guidance.